SealCast. This is a video and podcast sponsored by SealBlock that features the movers and shakers of the blockchain industry. Before we get started, there's nothing that we're saying here is tax or legal advice. Please don't construe it that way. Everything here is good faith, friendly, just having a good conversation with some friends here. Today, I'm really excited. This is Ryan and Nate Sagul of Lavaliere Capital Management. They recently moved to Seattle to pursue the development of this project. Ryan's the co-founder and CEO, and buddy Nate is the chief information officer. And this guy soaks up crypto news like a sponge. He's basically
pretty much.
He's got an encyclopedic knowledge of what's going on with projects, the new, all the latest updates, what's going on where. It's always exciting to talk to them. So yeah, thanks for being with us, guys.
No problem. Thanks for having us on. Thank you.
So first thing I wanted to ask was, first thing I like to start out with talking to people is, how did you discover Bitcoin and blockchain? Fall down the rabbit hole.
Oh, well, I guess we discovered Bitcoin in 2010 really was like the biggest one when we went to college. Some kid on my floor started mining Bitcoin, and then a couple days later we got an email from our IT department at the school that pretty much was no Bitcoin mining at school. We've blocked all the stuff. You're using the school's electricity, and so that was the first big kind of entry. And then of course 2011 you have Mt. Gox, all that other stuff. Bitcoin's going to $1,200. You've got people screaming what the heck is this? How is just some computer code? Just it's literally just a string of text, right? It's worth $1,200 or even more. And so everyone's this has got to be the biggest bubble. And then you see Mt. Gox, and so it was Rose-Hulman's a really small engineering school. It's 2,000 people in rural Indiana. So we're all just a bunch of nerds there. And so of course everyone talks about it. And so 2012, 2013 was when first I got my first couple, and then kind of just grown from there.
Yeah, so whenever he got into it, he's my brother, and he told me a little bit about it. So I just started researching it, and at the time I didn't have any disposable income.
Yeah.
So I was like, that's just another stupid idea. I won't worry about it for now. And that could have been hundreds of millions of dollars at this point. And so then a few years later I kept seeing it, and I was like, all right, well, let's give it a shot.
Yeah.
And here we are.
Yeah. Dude, it's kind of interesting that did you ever figure out how the person on your hall knew about Bitcoin mining at that point?
I don't know. He's cool. He was a computer science major, so I assume he was just trawling all the different forums the same way that all the nerds do for whatever fields you are.
Yeah.
I know, I go online. I read a lot of stuff about stuff in my field, so he did the same. He probably stumbled on it maybe on an online game or something. Yeah. Some guy was I'll give you Bitcoin for your account or something. Who knows how he found it, but that's kind of how I found out about it, and I guess that's how our school IT found out about it and blocked it. So.
Yeah, that's really cool. So, in coming to Seattle, why a hedge fund?
Alright. Well, I guess the hedge fund is kind of attractive as an investment vehicle from a number of reasons. One of them is from a legal perspective, there's less regulatory overhead than if you're say making a mutual fund or an ETF, because you kind of limit your pool of investors to people you kind of have a substantial relationship, right? You can kind of get away with a little bit less of the legal overhead. I mean, not to say that there isn't. There's still quite a bit. But you're limiting your pool of investors. In exchange, you're kind of lessening kind of the regulatory burden. The other thing is it allows a lot of flexibility and a lot of change in terms of the strategies you run and everything else. There's this big document called the PPM, which is the Private Placement Memorandum, and in it kind of outlines everything that we can do. And because it's a hedge fund, and because it's only open to a select few group of investors, then you can kind of do a lot broader of a range of things. There are some hedge funds that do horse racing, right? And so you can put your money in, and then they'll bet on the horses or bet on the dogs for you. And so it's really crazy all this stuff that you could do, because it's not a traditional investment vehicle, because you're supposed to be vetting the people to see if it's a profitable activity for them and reasonable for their investment tolerances and stuff like that. You can kind of get away with some of the more ridiculous things. And so because digital assets and cryptocurrencies, they aren't considered securities right now, we figured that's probably the best way to do it, because you see there's a lot of regulatory issues trying to get an ETF and everything else. Hedge fund, we thought would be an easy way to get up and get started. and then also allow us like enough flexibility to kind of do a lot of strategies and stuff that we like to do. And so that's why we chose a hedge fund specifically.
That's cool. I didn't know you could have a hedge fund gambling on horses
Oh
and
yeah,
stuff.
you can
That's pretty crazy.
pretty much do whatever you want. I mean, within reason, obviously. If you like just spell it all out in your private placement memorandum. I mean, obviously, like you can't run Ponzi schemes and any of that. But if you really want to create the all-in on black roulette hedge fund where you get all your clients' money, go to Vegas, and put the entire fund on black and then on the roulette wheel, well, I mean, you can. Is it a good idea? Probably not.
Yeah.
But as long as it's like clearly spelled out for everybody, it's a pretty flexible vehicle in terms of what you can do.
Cool. That makes sense. Okay, so I want to step back because the Winklevoss ETF, the hubbub over at the beginning of last year was part of what got me back into learning about blockchain. I mean, I similarly had heard about Bitcoin before, but it was all in the news, and that was right before the crazy bull run. So there were plenty of people talking, and increasingly more and more people talking. But
Absolutely.
Let's be real. Most of us have no idea what the difference between an ETF and a hedge fund and all that sort of thing is. So break this down. What is a hedge fund? What's an ETF?
So a hedge fund is pretty much a private pooled investment vehicle. So it's a limited partnership. So all of our investors join our LP company, Lavaliere Capital, and so they all buy in shares of the money or shares of the company based on how much money they put in, right? And so we issue new shares at the current price per share. Our administrator takes care of what the subscription cost per share is. So when you put in $100,000, if you put it in at the beginning, that may be one share. But if you put it in 5 years, it could be like 10 shares or or like a tenth of a share, depending on if the initial investor's money goes up and down, right? So they track what the initial investment dollar cost is, and then when you buy in with money, you get that many shares of the limited partnership. So then the limited partnership then contracts our LLC or our general partner to essentially manage the limited partnership pool of money that kind of gets put in. So when you're buying into the limited partnership then contracts us, the LLC, in order to manage all the money in it. So then the limited liability company then just makes all the investment decisions, essentially. Whereas an ETF is kind of different. So an exchange-traded fund so this is a limited partnership, I guess. You can only get placed in if we offer you the private placement memorandum. And so that's the only way to get in. We're only allowed 99 partners. We have to do due diligence and KYC AML on all of our people who buy in, stuff like that. And ETF is an exchange-traded fund. So in order to have an ETF, first of all, you have to get it listed on an exchange, right? So you have to have a certain amount of money. The process for getting listed and for all the legal compliance work is significantly higher. I think we are seeing estimates between $200,000 and $400,000 per year to kind of get that going and maintain it and everything else. In terms of the legal cost of just getting this up. However, an exchange-traded fund is fantastic from a fund manager perspective because if when I'm running my hedge fund, say I'm managing your money and you don't like how I'm doing, right? What you would do is you would say, hey Ryan, I don't like how you're managing your money. I'd like my money back. And so then I would cash out the money from the limited partnership and say, all right, here's your money if you made or lost or whatever, but here's how many shares and here's how much they're worth, so you get your money back, plus or minus any gains or losses that we have. If it's an exchange-traded fund, investors don't really have that recourse. If they don't like how I'm managing their money, they cannot take their money out of the fund. What they have to do is sell it on the exchange to someone else who wants to get in on the fund. So if you're trying to withdraw your money, you wouldn't just say, Ryan, please withdraw my money. You would take the shares of this company. You might sell them to Stan or Nate or just anybody who wants to buy it. And so because of that, you might have fluctuations between the actual share price of the fund and the price that you're getting for selling your share. Because if I'm doing very poorly, well, the market price may be lower than the average value of all the shares that the fund actually owns, right? So if ours was let's just say an Amazon-only fund, right? And so my company only buys Amazon stock, and one share of my stock is worth one Amazon stock. And so you owned one share of mine. So an Amazon stock may be worth $2,000, but because I'm taking a fee off of it, that my ETF may only be worth $1,900 for that same Amazon stock worth. And so the converse may be true. If I'm doing really well, then it may be worth more than the underlying value. So you could get $2,100 even though the share is only $2,000, because the share equivalent would be one Amazon, which is $2,000.
Okay. Wow. Okay. Cool. That's yeah, that's interesting. So how does all of that? So how do these financial products fit into the vision of you know, whenever we talk about crypto and blockchain, it's hard not to talk about decentralization and
Absolutely.
you know the trends where everything is going. And with a lot of that, it's always this idea of spreading the opportunity around. But
Yeah.
you know, a lot of when you talk about hedge funds and ETFs, it's typically we assume that these are for people who already have money. So, how do you see this sort of like fitting into the vision of crypto, or like
Well,
where's the line there?
it is generally true that the vehicles, you know, they are for people that have money, and they don't. Crypto doesn't necessarily fit with them, and the reason why is because a lot of these ultra wealthy people, they have their money in trusts, they have their money. There's retirement accounts, all these different things, these giant pension plans for state governments, and they can only invest in certain things that have, you know, legal custodians. There's certain government regulations that say they can only invest in this type of thing, and so they can't just go out and buy Bitcoin. If they want their fund to be exposed to cryptocurrency, they're going to need something like an ETF or some type of hedge fund or another instrument like that, you know, trading the futures. They can't just go on Coinbase, buy some coins. It just, unfortunately, doesn't work like that.
Mm-hmm. Interesting. Cool. So it is still promoting accessibility to.
Yes. So I think one thing kind of to note about ETFs though, they don't necessarily going to promote exposure to Bitcoin and everything else. I mean, while you may have exposure to it in your financial portfolio, it doesn't necessarily mean that they're going to have any meaningful like exposure. I guess you can argue that there's a secondary effect of people being able to buy it means that they'll learn more about it. But an ETF, all they're going to do is, or at least some of the proposed ones, are just going to be buy a huge block of Bitcoins and then use that as their share. They're not going to, or they may or may not, to do any development process on that. They're just going to take that amount of Bitcoin out of the circulating supply. I mean, if you look at traditional supply and demand, you take away 1 million Bitcoins out of the 15 million circulating, or whatever it happens to be right now, well then supply and demand says the price will go up. And so, of course, that's great for everyone who's holding Bitcoin if the price goes up, but is that going to affect adoption? Well, maybe not, because again, all they're doing, or all they could be doing is just saying, all right, we own 1 million Bitcoins, here's their fair market value, and now you can trade them on the stock exchange, right? Does that necessarily promote the fact that because it's an ETF that Bitcoin's going to get more popularity? Well, I mean, it may have secondary effects, as people would say, oh, I bought this like Bitcoin ETF, like what's Bitcoin? But just because they're buying and holding it and the price goes up doesn't mean anything at all about adoption, because again, some of the proposed ones, again, are just holding these in cold storage wallets. They're not paying any money towards developers. They're just having it as an option for people to trade. So I don't think it necessarily means that there's going to be any adoption or like any widespread news because there's an ETF. I mean, it could have secondary effects, but it's not like a necessary requirement, I think, for widespread adoption.
Mm-hmm. So what do you think? What is the missing? What is the missing link? Or do you think? I don't know. What do y'all think is? What is it gonna take for adoption to?
I mean, I think we're going to need
kick off?
a lot of like big important business use cases for it, right?
Mm-hmm.
Right now, if you like kind of look at all the smart contract platforms and everything that's out there, yeah, there's like some cool stuff like CryptoKitties and some games, but there's nothing really like game changing about it like on there where your business has a huge strategic advantage to use the blockchain, right? I mean, there's obviously a lot of like use cases, like theoretical use cases, but until people start developing concrete like examples and things that businesses can do, and businesses can start either buying them from a company to like implement into their business, or they can say, all right, well, we can see that there's clearly a strategic advantage. We're going to save $50 million, $100 million. We're going to save 20% on overhead. We're going to save $50,000 a year on our auditing. Until there's concrete examples where businesses can go out and use it, or a person can go out and use it for their own business, I don't really see like mass adoption happening. Well, yeah, we're starting to build a lot of these really neat technologies that you can build these things on. Until they're there, I don't think we'll see the big business like adoption. I think the first people who are going to make a ton of money are going to be the ones who are able to say, here's our business use case, and then go sell it to someone like Amazon or Microsoft, or even like a smaller business, and say, hey, here's our case study, we got ABC business on it, and so now they did their audit and they saved them $15,000, and so you too can save all your money on your auditing if you use our ABC application or this blockchain. I think that's when you're going to start seeing mass adoption.
Yeah, so that's one thing is the adoption. But a couple other main things which for now aren't required, but scalability is going to be one of the main things. But until we start seeing a lot of users, scalability doesn't matter. It doesn't matter if you can do 10, 100, or a million transactions a second if there's only 50 or 100 or 200 people using it each day in the world. And then another thing is just the interfaces. It's kind of hard right now with a lot of different cryptocurrencies or digital assets to just interact. Even just if I wanted to send you just one token or a half a token, it's not always that easy.
Yeah, that makes sense. Yeah, so there's still plenty of work to be done to get us there.
I think one thing that I've kind of noticed with cryptocurrency in general, people have been really focused on like the tech end about, it needs to be technologically secure, which is definitely true. But again, for mass adoption, your grandmother has a lot of trouble accessing her email. How is she going to use any of these currencies, right? If you're talking mass adoption, everyone needs to be able to use it. So while yes, you may need a great technological backend, but you could also get a pretty good advantage if you have, hey, this is a really easy and secure interface where you can just download our wallet app, and then it like interfaces with you, and you can just like click a few buttons. Because right now, when you're sending to the address that's like XQTZ91QQRXC, like how are you expecting your grandparents to like understand that at all, right? Like if they're having problems like finding you, texting in their contact list, and they have like your full name there, how are they supposed to like acknowledge that they're sending that? And then also with that is, how do they know like what's a valid person to be like sending to, right? So if you have the wallets and you're able to easily see who you're sending to, well then that also lessens the probability of people getting scammed, right? Because they know the wallet of their niece or nephew or their great grandson, and if they want to send them $10 worth of Bitcoin or whatever for their birthday, it's very easy for them to do. Right now, when you have to log in through like 3 or 4 different interfaces and use your hardware wallets and have all your seed words and seed phrases, well, that can be confusing to a lot of users. And I think just like a more usability and ease of use, I guess, even for like non-tech literate people, it's going to spur on more adoption as well. When it's super easy for someone to use, if they can just download an app and use your cryptocurrency, well then that's a lot easier, and you're going to get a lot more adoption than anyone who has to use like the inline like program command prompts type of thing in order to use your currency.
Yeah, that makes sense. So how are you dealing with these issues with Lavaliere? Like what are the what's unique about having a crypto hedge fund versus a traditional hedge fund, and what are you guys dealing with like that's unique out of that?
Okay, alright, so I think one of the unique things about cryptocurrency or digital assets is we have to be a qualified custodian of our clients' money. So if I was a normal hedge fund, I would generally have my bank or my broker hold all the stocks and bonds for me and just in my name. So when I got money from my, I guess I go out to my investors give me money, the money goes to the broker or the bank, and then I'm allowed to trade on behalf of that account, on behalf of my clients. But then all the money in the bank and all the stocks and bonds are kind of held by that bank. And so they have their own internal controls and everything to make sure people aren't stealing out of it, make sure that we're not doing anything improper, we're not sending money to terrorists and all that kind of stuff. Whereas when you're a cryptocurrency fund, there's not a qualified custodian at this point. I think Coinbase is in the process of becoming one, or their Coinbase holding is.
Well, I know Gemini is also working on it.
Gemini as well. There could very well be others, but they're not all entirely like qualified custodians, right? And especially not some of the other exchanges. And there's a lot of coins that just don't have qualified custodians if they're not on those. I could be wrong, but essentially there's not that for the crypto space. So we have to have full control of our clients' money. So what that means for us is we need stricter internal controls. We need stricter auditing. We need stuff like that to kind of ensure that we're doing the right things the same way that a bank would do. I think the next biggest thing is the people in the exchanges that we interact with are a lot different than a stock exchange. So when we're trading on a stock exchange, we know 100% for certain that everyone that we're dealing with has gone through the big KYC AML process with either their broker or while they were getting their broker-dealer license or all that stuff. When you're dealing with crypto exchanges, I mean, you have what happened with BTCE like 2 years ago was seized by the FBI. So there's a small risk, obviously, of your counterparties not being good actors or being bad actors. And so when you're dealing with banks, they may think, or a lot of them actually think that it's not good, because then if you can't 100% prove everybody on the opposite side of every transaction that you've been on is clean, well then your money may not be clean, and then they may be liable if for transacting the money back to the client. So if I make a trade on an exchange and it comes out that some bad person used that exchange, well, there's no way to prove that the bitcoins or whatever assets that I got out of it were legitimate. And so then when I passed it through to give as people withdraw money, or if I like put it in the bank, well then the bank thinks the money might be tainted, and so then it becomes a huge regulatory issue. And so stuff like that hasn't been made clear about. There's not, I guess, I mean there are laws about it, but it's still not like certain about the way it's going to go in the crypto space, versus like if we're trading on like an exchange for stocks.
Yeah, so if you're buying a stock, when you go to do that, you know that the exchange is open for set hours, and the website's not just going to go down. Trading isn't just going to get halted, and you don't have to worry about an exchange just running away with your money. Not just getting shut down by the FBI, but just flat out just shutting down their servers and just running with all the funds.
Yeah.
So that's also another huge risk that we have to worry about.
Yeah.
Okay. So, sorry.
Go ahead.
Oh, yeah, I just want to, so in dealing with this, what's your day-to-day like? Or do you even have a day-to-day, or is it just kind of
So
fighting fires as they...
So our day-to-day right now is significantly different than when the fund is going to go live. Right now, we don't do any trading. We don't do any management of money. We don't have to do all the reporting and normal stuff that we would do. Right now, our day is like mostly dealing with the Washington Department of Financial Institution, interfacing with our lawyers, making sure all of our documents are up to code, doing a lot of research, and then doing coding on our own, quantitative modeling, machine learning type stuff, in order to like get our strategies ready to go. If and when we get started, hopefully we get registered, then it'll be a lot more trading, a lot more that kind of thing, a lot more, I guess, like reporting and stuff, and less dealing with the lawyers, because we've now gone through the regulatory hurdles.
Yeah. So, we were talking about this a little bit before the podcast, but what's your experience been like with the regulators so far?
I'd say it's mostly been
Pretty
positive. Yeah, they're pretty responsive. I mean, again, it's just kind of frustrating going through all the different hurdles and everything, but that's the process to be expected. I think we had a pretty good call this morning with Liz out of the DFI, who's I guess working with us, and so hopefully we'll be able to get through that process soon. And again, it's just kind of like a paperwork kind of stuff in order to make sure that we're crossing all of our T's, dotting all of our I's, and making sure that we get it done correctly in the right way, I guess.
Mm-hmm. Is it just, who besides DFI do you have to deal with?
So right now,
Or is it mostly through them?
yeah, so right now it's only through the Washington DFI. We're not big enough to register with the SEC. As we get more clients, we may have to register in other states. I think there's like I think it's called the de minimis exemption. You're allowed to have like up to 5 clients in a state that's not one that you registered in, and then you have to like start going through the process to get registered once you've like reached out to like a certain number of people in that state. And so we'll, as we grow, we may need to register in a few more states, or if we grow large enough, hopefully we can just register with the SEC, which then allows us to kind of not have to register on a state-by-state basis.
Yeah. Yeah, I know the DFI is working really hard to create those regulations so that businesses can do their thing in Washington State.
Oh yeah, so the DFI isn't really for the businesses, it's to protect like clients' money, right? So the whole idea behind the DFI and the SEC and those similar things are there's a lot of like predatory people who like create these vehicles and can do other unsavory things. And so the purpose of that is not really to regulate the businesses, but it's to ensure that the investors and everything else, they're getting a fair deal. They're not getting taken for a ride and have all their money stolen and things like that. So it doesn't really have anything to do with what we're doing in terms of what we need to do. It's how can they keep the client or the investors' money safe from people who may try to take advantage of them.
Yeah. So what projects, Are there any projects that you guys are especially excited about? Nate, Nate,
Well,
I want to hear from you.
So we know that we saw this massive ICO boom last year, and now it's kind of slowed down and sort of fizzled out a little bit. But all these projects had all these promises, and there haven't been, many launches of anything. So I'm excited, not just for one project in particular, but I'm excited to just see what projects, fulfill their promise, what projects just completely disappear. There have been, several scams. And then also what projects just try and try and try, but aren't even able to make what they say they are.
Yeah.
So that's what I'm excited for.
Are there any that you're following specifically, or
Well,
are you kind of just keeping it broad?
I'm kind of just keeping it broad, but I do like smart contract platforms. I think those are a big thing. And recently, actually, we've seen like a huge decline in the price of Ethereum, and that may be due to this ICO bubble deflating. And projects are getting discouraged. They might have raised 50, 60, 70 million dollars, 100 million, 400 million, 300 million dollars, and when they raised that money, it was collected in Ether, and they didn't cash it out. So there was a guy on Twitter. He was he's the head developer for one of the projects, and he said, his tweet said, "I just got back from a conference and I talked to some head devs from another ICO. They raised $30 million. They have $4 million left, and they only did the ICO like in January. They've only spent like $1 million, like actually spent, and they've lost $25 million just holding." So at some point, like when they raised the money, they had a plan, and the plan was a budget with 30 million. Now they only have 4 million. What's going to happen to that project? Are they going to have to do a second fundraiser, or are they going to dilute all the other guys, or are they just going to quit? So I'm just pretty excited about that. Looking forward to see how it all shapes up.
I think exciting for like the blockchain space and exciting for us as investors are like two kind of different things. I think we're excited when there's volatility, the price goes up, the price goes down. If something trades sideways, well then that may not be profitable. It may be really cool because they're doing really neat and exciting things in the blockchain space, and they may be developing a lot of stuff, but if the price kind of goes sideways, that's not really exciting for us in terms of like being able to make money. So even if a project is like crashing and burning, well then as a short opportunity, that's exciting, right? Because if the price goes down, we can kind of follow that down. Or if they're doing fantastic things and we're able to ride the wave up with them, or the rocket ship to the moon as they call it in crypto land. But I mean, that's totally fine and exciting as well. Even if a project is doing new and innovative things and the price trades sideways, that might not be exciting for us. That could be a boring project that we don't like, even though we may like it in terms of like, hey, in like 5 years this project may be cool. That's not really exciting because there's no returns to be had. So I think in terms of blockchain evangelists and stuff, what we find exciting is going to be slightly different than what you're finding exciting in terms of like new technologies and stuff like that. I think there's a lot of undervalued coins and frankly many more overvalued coins of projects that either are doing a lot of cool things. They just either didn't have an ICO and didn't raise money, or they only raised a little bit of money but they're not putting it into marketing, and they're doing a large amount of development on their own platform. I think those projects like that are pretty exciting, especially if they're seeing like outside interest, like if they have no raise, but now they're working with say $1 million or $1 billion like a Fortune 500 company or something like that in order to like develop something on those chains. I think those projects are undervalued and are exciting to me. On the converse side, you have projects that have raised like millions or hundreds of millions or billions, or even just like forks of other coins that really aren't doing anything innovative. They're just, but they're still in like the top 100, right? So those are kind of disappointing coins for me in terms of are they doing anything, right? And so you can kind of take a look and make your own decisions about them. But I think it's really important that you go and you look at all the coins out there. I think even down in the 300s, 500s, like 800s, you can still find there's still the opportunity for some of those coins to develop and do great things. And the same thing in the top 100, there may not be coins that are doing anything at all that you would consider like valuable. I think you just have to go out there and like look for them and say, hey, what do I think the nature of blockchain technology is, and then what can I, or like, which of these coins are following them, and kind of making decisions based on that.
Mm-hmm. So let's talk about Tezos for a second, because I know y'all done a little bit of work with them. Pretty controversial project in the community, I'd say, but you were telling me some really interesting things about their approach to the smart contract platform. Can you talk about that a little?
Yeah, so there's a great piece. It's written by the co-founder of Coinbase. It was last August, not the one that just passed, but a year ago. Mm-hmm. And if you want to look it up, it's on Medium. It's called Fred Ersham, The Evolution of Blockchain. And in the article that he writes, he kind of talks about how you need some type of incentive for people who are developers to work on an open source project. And so he studied the GitLab repos for Bitcoin and Ethereum, and what he found is there are only actually, at the time, there were only actually 15 active contributors to Bitcoin and Ethereum. And today, Ethereum's worth about $20 billion, and Bitcoin is worth about 110 or 120 billion dollars. There's 15 people working on it. And so he's like, well, why would people work on it? And the reason they work on it is because they're early adopters. They got in when it was cheap. So yeah, they're working for free, but the more work they put in, the better the coin is, and the coins that they got for a penny, can just continue rising. Now, if you're a developer who's, arguably smarter or better than this guy, and you only found out about it a month ago, well, are you really going to put that much effort into the platform? Probably not. So that's what he talks about. And so these guys that found out about cryptocurrencies, last year or a year and a half ago or 3 months ago, they're not contributing to the core protocol. What they are doing is creating ICOs, because ICOs are how they can get their money. They can get their money rather than just working for free on the protocol. So over time, what's going to happen is, well, actually it happened like last week. So one of the developers for Ethereum, I believe he's Chinese or Japanese, I don't know his name.
Yoichi Hirai may be butchering that.
But he posted on Twitter, and the tweet he posted was a link to his personal website, and he said, I'm leaving the Ethereum project at the end of October. Here's my resume and my website. If you're hiring, please let me know. And so, there is no central entity paying this guy, and maybe he decided to cash out, or maybe he didn't have much Ethereum to begin with, but he's, for whatever reason, decided that at the end of October he's done working on the project. And it's because there's just no incentive for him to stay. So I think that's going to be a major problem with blockchain and just open source projects in general over time. And so what Tezos does is it can solve that with on-chain amendments.
Okay, so they're doing some unique things with governments.
Yeah, so, they're doing things with governments, but there are on-chain amendments, and what that is a developer can submit a proposal to update the code base, and when they do that, they include a price that they want. So if they discover some code that can bring secrecy to transactions like Monero and Zcash do, and they find a way that they can bring that to the Tezos network, they can submit that code and say, okay, we want 1% of all the Tezos tokens, and if you like this idea, you vote yes, and if you don't like the idea, you vote no, and the coin holders on the network will vote. If it's a good idea and they think it's worth the 1%, they'll vote yes. If they think it's a good idea but 1% is too much, they'll vote no. So if they vote yes, then whatever price that the developer tagged to the creation he made, the network will inflate 1% more tokens and pay them to that guy. But the argument here is, okay, if he creates that and puts it into the protocol, it's going to drive the value of the tokens up by a certain amount, and so that even though everybody gets deflated by 1%, they're expecting the value of the network to go up by more than that 1%. And so there's always an incentive for any developer to come and work on the platform, and they don't need to be an original holder or anything like that. And so I think that that is something that could be very strong to lure in developers.
That makes sense. Yeah, there's certainly a lot to think about when it comes to these issues of governance and how smart contract platforms use them to incentivize their developer communities. So we talked about projects that you're excited about. What about projects that you're, are there any projects that really just upset you? Like the next, is there any like projects that you think are the next BitConnect or something on your radar?
BitConnect X.
Wait, is it?
Yeah, that's actually a thing. Yeah, so basically you can trade in your BitConnect tokens for BitConnect X.
Out.
Yeah, that launched immediately afterwards. So, I mean, these things there's a lot of scams that are still prevalent in the blockchain space, and I mean, it's just really disheartening to see. Like, and then I'm sure there's a lot more of these ICOs that, because again the prices are going down, I wouldn't be surprised if some of them we saw more exit scams. It wouldn't surprise me at all.
Yeah, things I'm not excited about, projects that raise way too much money.
Amen.
Projects that raise their funds in offshore and obscure ways so that all the money they raise doesn't have to be used to develop. It's basically just a robbery at that point. Yeah.
Are there any interesting things you're seeing as far as approaches to ICOs?
I think we're seeing like a big transition like towards actually securitization of ICOs.
Mm-hmm.
There's sure a lot of like legal debate around like utility tokens and everything else, but just from like an investor's perspective, a lot of these tokens that we've seen should have been securities. They're essentially offering securities to non-accredited investors, and when you're buying a utility token or something like that, you're expecting to get something out of it, some use out of it. But generally, like these companies shouldn't be creating their own blockchains, right? They should be creating a dApp ecosystem on a smart contract platform or using some other infrastructure, because there's not a lot of reason we should have 1,000 competing blockchains. I think we're going to see more and more centralization towards a few like blockchain ecosystems of some sort. But the thing is, when you're buying like these tokens, you're almost everybody who bought into these ICOs, I would say 90+% of these people were having an expectation of getting a return because they'd buy the token and be worth more in the future, which is definitely indicative of security. But also, if you're buying a security, you're getting a right to vote in that company, you're getting a share of profits, and there's a lot of other things that you're offered as a security that you're not getting as a token holder. And I think a lot of the companies that are launching it now are realizing, hey, we're stripping our rights. Like, we think the SEC or some other regulatory bodies are going to come after us in the future, because what we're offering essentially is you give us all the money for everything that we offer as a security, but we're giving you none of the rights, and we're frankly handing out just like worthless or not very valuable tokens compared to what you should have gotten as a normal seed or angel investor if you're going through, say, like a venture capital round of raising or something like that. And I think that's why we're seeing a lot of the ICOs now, or at least more of them, go through the whole SEC security registration process, or the equivalent for whatever country, rather than the ICO route.
Mm-hmm. You brought up an interesting issue, talking about accredited investor requirements. Like, if I can go take out a mortgage on my house and wreck my future investing in BitConnect, then, I mean, are these protections still relevant? Like, or do you support them? What do you think?
I think one, it's the investor protection laws are there for a reason. In order to invest in a lot of these things, you need to either be sophisticated about the topic, and so for instance, like if you're a software engineer, it may make sense for you to invest in like your game development studio, right? But it doesn't make sense for, let's say, an elementary school teacher to invest into some of these other things, like these very complex blockchains and like financial products such as that, because they don't have like enough knowledge to really make like a fair decision about it, right? The other thing is kind of just like having money. So are you able to withstand the loss of this investment, right? So maybe you are a sophisticated investor, right? But are you really able to handle the loss if you lose some or all of the money that you put in, right? So if you're working like a minimum wage job, right, and you put in $5,000 and then it goes like down and you lose all that money, well, does that mean like you're losing your house now? That's why there's these protections in place for people when they're investing in securities, because when you are investing in securities, there is a good risk that you can lose some or all, or if you're using even like leverage, you could lose more than all of your money. And when you're buying into these securities, it's very important for people to know whether or not you can handle that risk. That's why when you call up your brokerage, they ask you like, oh, what's your experience with trading? Like, what's your risk tolerance? When are you retiring? Because they need to know a little bit more about you to say, hey, are these things appropriate for you to have? Well, we can have a big argument about whether or not it's too restrictive or not, but those are the rules that are in place, and they're there to protect and whoever's investing. When you're doing these ICOs, well, again, you're seeing these companies come out of Vietnam where there's not all these consumer protections, and they're taking money from people in America who shouldn't be allowed to invest normally through normal investment processes. And so they're really skirting a lot of the rules and regulations that are out there. I think it's an entirely another debate if the rules and regulations are correct, but the reasoning behind the rules and regulations that are there are generally pretty solid, and the ICOs have kind of been skirting them, or some of them, not all of them.
Yeah. Listeners, please like and subscribe if you enjoyed this video. Sign up for a free trial of SealBlock using the link below. If you want to join the community, check us out on Discord using the link below as well. Thanks for listening.